Okay, we're going to get right into analyzing a potential 20 bagger. The company is called Hemostemics. The symbol is HEM on the venture exchange. I just wanted to start off by saying I do own shares in the company, so I have purchased. I also want to mention that I am not a financial analyst, so don't take these slides as any types of recommendation. This is just for my own purposes only and for you to look at and make your own decision, do your own due diligence before you purchase anything. Again, this is not a recommendation by me. So just to let you know what I think a 20 bagger is or what a 20 bagger is, basically if you purchase a stock for a certain price, you are hoping that it will reach 20 times what you paid for it and therefore making a lot of profit. So with that said, we'll get right into it. First, I want to explain what Hemostemics is. It's a company that deals with ischemia, and their product is a product where they would take blood from a patient that has ischemia. They would put that blood into, mix it with one of their cocktails, a patented product, and then mix it all up, bring the blood, insert it back into the patient after about 7 days, and then hope that the ischemia will be lessened or cured. Early indications show that I guess they released something where it was 83% effective, so looks pretty promising. That's kind of why I got into the stock, and the fact that it's got huge potential. I say 20 bagger because it could be a 10 bagger, it could be a 50 bagger. It just depends on how good the phase 2 results are. So with that, we'll go to the next slide. Okay, the market upside and potential to make money. First off, if you are enjoying the video, please press the subscribe button or like this video. I do have another video out that I made before this, so you might want to look at that before looking at this. But with that being said, we'll just go on to the market upside and the potential to make money on this. As you can see, the product is called ACP-01. Potential markets for CLI or critical limb ischemia is about 2.5 or $248 billion in the U.S. And when you get into the cardiovascular end, it's a lot more. It's about 555 billion. So the market is huge. Even if this company was to realize a 10% market share, because they would probably, I believe the only company to have product that works so well in people with ischemia. Capturing 10% of a market is very doable, and with that, if 10% of even the 250 billion would be $25 billion. So with a market cap of, I think their market cap right now is about 50 million. Oh, sorry, 50 million fully diluted. So even at a 1-to-1 multiple, that is much more than a 20 bagger. It's quite substantial. So the market for this, the potential is huge to make money. Where the stock stands right now is 46 cents, I think it is, as of today, February 13th. So another reason why I looked at this company is because the market upside is so huge. So we'll go to the next slide. Okay, a lot of people always ask where do you find the stocks to invest in, and basically when you're in the stock trading game and you're looking for stocks, you can find them just by looking at the venture exchange or whatever exchange you're looking at and see what stocks are available in the biopharm arena. And then you can go to places like message boards like Stockhouse. 90% of the stuff that's on Stockhouse, you want to kind of weed through it, and 10% of it is somewhat interesting. So I had a stock that I was trading. I looked on the message boards to see what's being said about it, weed through about 90% of the stuff, and see that some people make recommendations. You look at those recommendations, you do a little analysis like I'm doing here for Hemostemics, and pretty much it's 1 out of 10 that you actually do the analysis on, because it takes a little bit of time to look into a stock, and this one looked interesting, and it's definitely well worth my time. with the as you can see on the previous slides, the potential market size here, it also, in my mind, makes this company an attractive buyout opportunity for any large biopharmaceutical companies that are in this field. So with that said, we'll just go to the next slide. Okay, shares outstanding and market cap. So right now they've got about 55 million shares outstanding, just over 100 million fully diluted. You can see there that there's 39 million warrants available. I know they released that they were, when they did their last round of financing at the end of December last year, they announced that the warrants would be exercisable at $1. I believe since then they've changed that to allowing the warrants to be exercisable at 55 cents, which to me is good news, just because as this share price starts to inch up and passes that 55-cent level, it'll just mean that people can invest their money earlier, and that will put more money in the pockets of the company, more money in the pocket of the company, less money they got to go and dilute the stock and raise more money. So a good sign to me. Also, you can see that with 55 million shares outstanding at 46 cents a share, you're looking at about $25 million market cap, even at fully diluted with all the warrants exercised, that would be about a $50 million market cap. And with the potential size of the market being billions of dollars, I mean, you're looking at a 20 bagger minimum, making this a very attractive, to me, a very attractive buyout opportunity for a larger pharmaceutical. Again, it's just this thing's firing to me on all cylinders. As long as they have the money to get to the results at the end of April, which is the phase 2 results, end of April, early May, I think they're saying, without raising and lowering that share price a little bit, because sometimes when they raise money it does dip a little bit, but hopefully they can attract some big pharma as well on the way. We'll go to the next slide. Okay, looking at the company website for information, basically all of the slides that you see here on this presentation, I went to the company website. I just went under investors and looked at the investor presentation, downloaded it, took some screenshots and put those ones that I thought would be relevant onto this presentation. You also look for things that are newsworthy, so you look at the news and media, you look at what news is out there, what news has been out there lately, if there's any news that dropped the stock substantially or made the stock pop. So a lot of things you can find out just on the news releases of the company. Very important to look at. So we'll go to the next slide. Okay, looking at the 1 year and 5 year chart, the 1 year on the left there just shows that there's been some increased activity, a little bit more interest in the last little while. The stock has gone up, trading at 46 cents today. They did do a reverse split at the end of December 29th of 2020 last year. And it was 1 for 20. I think the stock was trading at about 3.5 cents, and it went up to 70 or 80 cents, and trading now at 46 cents. So post consolidation, looks like it's a much better buy right now than from the highs, with an upcoming milestone end of April, early May. I think this was a good starting point for me. I do look at these charts to see if there's any huge upside blips or downside blips, and then I just go into the news at that time. I see what time on the charts or what date that those blips happen, and then I just go into the news and see the corresponding time frame to see if what made the stock dive or what made it pop up. A lot of times it's macro environmental things or things like a pandemic that you'll see a huge drop or a big pop in the stock. Like in the gold stock, you see a big pop because gold went up from $1,800 to $2,000 or something like that. So those are the types of things I like to look into. If it's something that I can't control, like a pandemic, then I know at least what it is. I don't have any fear of it being something like a failed trial and then the stock started rising again just because of promotion from the company. So these are the reasons I look at this kind of thing. Also, I like to buy a little bit on the lower side so that I have a lot of upside potential. So we'll go to the next slide. Okay, we looked at the company news releases on the company website. And basically, I'm just checking for the money that's been raised or any dilution that's been happening. And looks like on December 31st, they closed a unit of their private placement. I think they raised about $2.75 million at 30 cents a share and gave a warrant to purchase at $1 for every share purchased, and then consequently they raised or lowered that warrant to 55 cents. So purchase warrant at 55 cents that I discussed earlier in this slideshow, I think is a good thing. People start purchasing at 55 cents and it gives a lot more money to the company, and that way they don't have to go to the market for more money if a lot of the warrants are purchased, and there was like 39 million of them, so that would be a lot of money in the pockets of HEM.V. Also, there was an announcement that they got some bread contract, and what I believe that does, that was released on January 22nd, it allows them to more easily access international markets. So that's a good sign here as well. So basically, that's what I check company news releases for on CDAR or wherever I have to look for financials and things like that, or other releases like for any litigation or anything like that as well. So with that, we'll go to the next slide. So on this slide, we're just going to look at the cash on hand and the burn rate. And so for that, I would just check their financials. You can go to the company website. Many times it's released there in a shortened form, or you can go on cedar.com and look at their full financials. I did take a look at it, and just to give you a snapshot of what I found is after the raise that they did in December, they did a couple of them actually. From what I see, they've got about $4 million on hand. Looks like they burn about, according to the financials, about $6 million a year, approximately. But I did call the CEO. CEO says that with new management and the things that they've done, they're burning a lot less than $6 million a year. He didn't tell me exactly how much. So I'm just going to go with the financials that are published and say that they're doing $6 million worth of spending every year. And that being said, they should have enough money to about the third quarter of 2021 before they start running out of money. So hopefully they won't have to go to the market and dilute anything until after the phase 2 results are released, which are due to be released according to the CEO in late April or early May 2021. And I think the anticipation of good results is going to start driving this price upward. So I think even prior to results being released, you could see a double or a triple in this stock. So that's just my opinion. Again, do your own due diligence. I'm not a financial advisor. This is just something that I'm doing in my own investing world and just sharing with you. So we'll go to the next slide. Okay, so the whole premise of what I do when I purchase a stock, I look for any major upcoming milestones, and then check all the other things that we went over on the previous slides and in a previous video that I released a couple months ago. And the major upcoming milestone for this particular company is the phase 2 results that are due at the end of April or early May of this year. So a couple of months from now. We talked about the potential upside. It's huge. There's also the possibility that I could sell the shares that I purchased before results come out, and hope that there's enough anticipation that I could see a double or a triple possibly. I think I might keep some shares just strictly for the massive upside that could come with a positive phase 2 result. Another thing that I realize about this stock is that there's a thing in the States called compassionate care, where I guess if patients that are suffering from a debilitating disease, if there's no other choice for them, they've exhausted all options, that they can go to companies such as HEM.V, and if the company has some positive results that are proven to be safe, patients can try those potential products on a compassionate level. So I believe that the product that this company offers costs about $25,000 per administration. So someone with an ischemia can go to a company like this, ask for to use their product based on compassionate reasons, and the company would make $25,000. And just how many of these they can do a year before they're even approved by the FDA, which would take a phase 3, which is lengthy. So the ability for this company, even though the potential upside is huge, for FDA approval would still be years away. This compassionate care portion of the business could start making them money, and lots of money, early on. So that's another reason I think this stock should really pop just prior to results, and then post results. Sometimes on good news, stocks don't go up, and sometimes they go down. But I think in the case of this company right here, I think post results that the stock would really pop and then run, and most likely you would see announcements coming out that the company is selling a product based on compassionate care, and it would go up even further. And I think it would be a potential buyout very quickly. All in my opinion. Again, I'm not a financial analyst, so. So that's it for this video. I hope you enjoyed it. I tried to keep it as short as possible and just give you an idea of what you should look for when you're analyzing stocks like these, and what I did to analyze this stock. So whether or not you want to purchase this stock based on what I've said, hopefully you do your own diligence. Like I said, I'm not making any recommendations. So if you did like the video, please hit the subscribe button, and that way I can keep making videos for you. Thanks. See you next time.